Hello, everyone, and welcome to episode 16 of Ask Mortgage Mike, where I take topics and questions that have been posed to me by you, the viewers, try to answer them in an educational manner. So today we're going to talk about mortgage documentation, the documentation that you're going to be required to supply the lender in order to get approved. Now, it's going to vary some, and I'll try to get through it quickly. But there are going to be 5 different categories that we're going to lump these documentation into. And the first one is going to be personal documentation. So this is going to be your driver's license, divorce decrees, and if you're a veteran, proof that you're eligible for a VA loan, if in fact you're going with a VA loan. Now then, before we dive too much more into the documentation, because there is an issue when we go in, on sometimes the clarity of documentation. Think of it this way. You're asking someone to lend you thousands, sometimes hundreds of thousands, sometimes $1 million, right? Or more. And when we ask for documentation, it's for a specific reason. Believe me, if I could do a loan like we used to do, where all I needed was a good credit score and that was it, everyone would love to do mortgages like that. But with the downfall and the crash in the market and the stricter guidelines and all the new regulations that come out, documentation that we request is not for my benefit. It's not because I enjoy asking you for documentations. It's because we have to have it. The underwriter has to have it, and the underwriter has to have it because the underwriter has a guideline that they have to clear in order to be able to make this loan sellable on the secondary market. So we have driver's license. We need it to be a clear picture of your driver's license. If you scan it and it's all blocked out, we can't read it, we're going to need a legible copy. So think of this when we go through these documents: legible, legible, legible. We've got to have it. Divorce decree, all pages. I don't care if on page 4 it states that you had to leave them your teddy bear collection or your teddy bear collection, and you don't want us to know that. If you're divorced, we need the full divorce decree so that we can confirm that there's no alimony or child support being paid through the divorce. So it's to clear things up. Proof of veteran status. So your DD-214 from the military gets discharged, shows your eligibility for the VA loan. We then order a certificate of VA eligibility through the VA. The next one is going to be employment and income documentation. So federal tax returns, 2 years. These are going to be requested on 99.9% of loans. If we don't have to have them all the time, but when we request a 4506T, sometimes it comes back where you had unreimbursed business expenses. You had a LLC that you no longer own, but you had last year and you wrote off $10,000. You have a partnership. Those you have a rental property. Those are things that get counted against you when applying for a mortgage. So generally, we're going to need 2 years tax returns. We do not always have to have it. If you're W-2'd, you had no other properties, no other write-offs, nothing else that's going to create any sort of issues, then we don't need the 2 years tax returns. But count on needing to provide the most recent 2 years. On top of that, 2 years W-2s to go along with that, and 30 days worth of pay stubs. If you're paid monthly, 1 paycheck. If you're paid bi-weekly, then we're probably going to need 3 paychecks. If you're paid semi-monthly, then we need 2 paychecks, right? We need 30 days history on pay. Proof of additional income, such as Social Security, alimony, child support, pension accounts, retirement accounts, distributions, annuity distributions. We need to have the documentation to be able to account for that as income when qualifying you. Previous 2 years and current year-to-date P&L. The P&L year-to-date we must have. Sometimes you'll have an underwriter that will request the information for the previous 2 years, but really we need a year-to-date P&L if you're self-employed. In a balance sheet, you don't always have to provide it, but it could be requested. Don't be surprised if you're asked for it. So the next section we're going to get into is assets. We need 2 months, 60 days worth of asset statements for any retirement account, savings account, checking account, if you need assets from it to close. If you're refinancing and getting cash out, I don't need assets because you're getting cash out. Unless we need the months of assets in order to qualify you, then we would verify them. If the down payment, so if you're purchasing a house and it's a gift money, your parents are gifting you $10,000 for down payment, we'll need to have a gift letter from your parents stating that the money doesn't have to be paid back. Then we'll also have to have documentation verifying that those funds were in your parents' account and are now in your account also. The next section is the liability section. So think of this as the debt section. we need to have canceled checks for rent. If you're currently renting, 12 months history of canceled checks, or we would do a verification of rent with the landlord. If it's a private landlord, then you're going to have 12 months canceled checks. If it's a company, a landlord company, management company, we can usually just do a verification of rent. A copy of the current mortgage statement. So refinance or purchase, we need to know that the taxes and insurance on the other mortgages, and we need to know what those mortgages payments are because they're not always reported on credit. Court documentation for bankruptcy or judgment. Gotta have it. Doesn't matter if applicable, obviously. And then a listing agreement. If you're selling a current home and it's under contract, we need to see that listing agreement so that we know that that home is actually pending sale. If the home's to be sold before you buy the new home, then we're good to go. And if not, if it's sold after you buy the new home, then we would just use it and count it against you as a debt because you would still have that liability. Property. So on the new property, we need to have a sales contract if you're purchasing a new home. And then in regards to refinance, we need to have the proof of the homeowner's insurance. And if it's a purchase, we just need to have the homeowner's insurance information before closing. You'll need to have that policy set up. And then a proof of the earnest money deposit. So again, this was episode 16. I'm going to attach a link below in the below the video that will allow you to go in and download this full PDF of what loan documentation you are or that you would be looking to submit. So again, episode 16, Ask Mortgage Mike. I hope everyone has a great week. As always, thank you so much for subscribing and watching the video. If you have any questions, comments, or concerns, please email me at askmortgagemike@gmail.com. But I hope everyone has a great week.